If you're 60 or older and relying on Social Security, a pension, or savings to cover your bills, this video is specifically for you. I'm not here to alarm you. I'm here to make sure you have the actual numbers, the real picture, and a clear list of steps you can take right now. Because right now, in 2026, there are some important things changing and a lot of noise out there making it hard to know what's real and what isn't. So let's cut through all of that. Here's what we're going to cover today: what the 2026 Social Security COLA increase actually means for your monthly check and why your check might not feel bigger. What's happening with Medicare Part B premiums and what the hold harmless rule means for you specifically. How the current market volatility affects people drawing from savings and investments. And a practical, step-by-step checklist of things to do this month to protect your financial stability. This is real information from real sources: the Social Security Administration, the Centers for Medicare and Medicaid Services, and independent financial research organizations. I'll tell you exactly where every number comes from. Before we dive in, if you find this helpful, please hit subscribe and turn on notifications. We put out videos like this every time something significant changes that affects your benefits or your budget. That bell icon means you won't miss anything important. Okay, let's get into it. Social Security has been around since 1935, but the cost of living adjustment, what we call COLA, didn't start until 1975. Before that, Congress had to vote every single time they wanted to increase benefits. People on fixed incomes were completely dependent on political timing. COLA changed that. It made benefit increases automatic, tied directly to inflation. Here's how it works. The Social Security Administration looks at something called the Consumer Price Index for urban wage earners and clerical workers, or CPIW for short. That's a government measure of how much everyday things cost. If prices go up, your benefits go up by roughly the same percentage the following January. The idea is simple. Your check should buy roughly the same amount of groceries, medicine, and gas this year as it did last year. That's the intention. Whether it actually works that way in practice, that's where it gets more complicated. And we'll get to that in a moment. What you need to know about the history is this: COLA has ranged from 0% in some years all the way up to 8.7% in 2023, which was the largest increase in over 40 years. That happened because inflation spiked sharply after the pandemic. Prices for food, energy, and housing went up fast. The COLA responded accordingly. Since then, inflation has been coming down, and COLA has come down with it. For 2025, the COLA was 2.5%. For 2026, it's 2.8%. Those numbers sound modest. And for most people, the actual dollar increase in their monthly check is modest. But there's another number moving in the opposite direction that you really need to understand, and that's the Medicare Part B premium. For 2026, Social Security beneficiaries received a 2.8% COLA increase. That's according to the Social Security Administration's official announcement from October 2025. What does 2.8% actually look like in your bank account? If your monthly Social Security benefit is $1,500, a 2.8% increase adds about $42 a month. If you're receiving $2,000, it adds about $56. Those numbers sound decent. But here's the part that matters for most people on Medicare. Your Part B premium comes directly out of your Social Security check before you ever see it. So when Part B goes up, your net check, the amount that actually lands in your account, goes up less. In 2026, the standard Medicare Part B premium rose to $202.90 per month. That's up $17.90 from $185 in 2025, a 9.7% increase in a single year. Let me put those two numbers side by side for you. Your Social Security went up about $40 to $50 a month, depending on your benefit amount. Your Medicare Part B went up $17.90 a month. So if you're getting $1,500 a month in Social Security, your COLA added $42, but Part B took back $17.90. Your actual net gain is about $24, not $42. For someone receiving a smaller benefit, say around $700 a month, that Medicare increase could wipe out most of the COLA increase entirely. This is the third year in a row that Medicare Part B has risen faster than the COLA. The Senior Citizens League, an independent advocacy organization, put it plainly: for many seniors, their benefits don't feel like they're keeping up, because mathematically, they often aren't. Here's something important, and it's actually good news for people at the lower end of the income scale. There's a law called the hold harmless provision. It says this: if the dollar amount of the Medicare Part B increase is larger than the dollar amount your Social Security went up, the government cannot let your net check go down. Your benefit check is protected from actually decreasing. So if you're receiving a smaller benefit and the math would normally result in your check shrinking, hold harmless kicks in and limits how much Part B can take. However, and this is important, Hold harmless does not protect everyone. It does not apply to people who are new to Medicare in 2026, people who weren't receiving Social Security in 2025, or people in higher income brackets paying something called IRMA surcharges. We'll talk about IRMA in a moment. It's not just the monthly premium that went up. The Part B annual deductible, the amount you pay out of pocket before Medicare starts covering things, rose to $283 in 2026, up from $257 in 2025. The Part A deductible, which applies if you're hospitalized, is now $1,136 for 2026, up $60 from last year. And if you take prescription drugs through Medicare Part D, the maximum deductible there went up to $615 in 2026 from $590 in 2025. These aren't small numbers. For someone on a tight fixed income, an unexpected hospital stay or a change in medications can create real financial pressure very quickly. If your income in 2024, that's the tax year the government uses to calculate your 2026 premiums, was above $106,000 as an individual or above $212,000 as a married couple, you pay more than the standard Part B premium. This is called the Income-Related Monthly Adjustment Amount, or IRMA. The SSA uses your tax return from 2 years ago to determine this. So 2026 premiums are based on your 2024 tax return. If your income has dropped since then, say, from a one-time sale of property or a distribution you took from a retirement account, you can appeal this. It's called a life-changing event appeal. You fill out Form SSA 44 and submit it to your local Social Security office. Many people don't know they can do this, and it can save them hundreds of dollars a year. Let's talk about the bigger picture. What's happening in the economy right now and how it affects people who are drawing on savings or investments in addition to Social Security. The S&P 500 is down about 4% year to date through early spring 2026 after a strong 18% return in 2025. Market volatility has been elevated. The VIX, which is essentially a fear gauge for the stock market, has been bouncing around in a range that signals meaningful uncertainty. Oil prices crossed back above 85 a barrel. And the Federal Reserve is holding interest rates in the 3.5 to 3.75% range. For someone still working and saving, a market dip is often no big deal. You're still buying in, and lower prices can work in your favor. But for someone already retired and withdrawing from a portfolio, the math is different, and it's something called sequence of returns risk. Here's what that means in plain language. If you retire and the market drops significantly in your first few years, and you're pulling money out while it's down, you're selling assets low. Those dollars don't come back when the market recovers because you already spent them. This is one of the biggest and least discussed risks in retirement finance. This doesn't mean you should panic and sell everything. In fact, that's usually exactly the wrong move. But it does mean that if you are drawing from investments right now, your withdrawal strategy matters more than ever. We'll cover that in the checklist. On the positive side, interest rates are actually working in your favor if you have money in savings accounts, money market accounts, or short-term bonds. With rates still around 3.5 to 4%, you can earn meaningful interest on cash without taking any market risk. That's been a real change from just a few years ago when savings rates were essentially zero. Okay, this is the part of the video I really want you to focus on. Everything we've talked about so far is important context, but this is what you can actually do about it. Print this out. Write it down. Pause the video if you need to. Checklist item 1. Verify your actual 2026 net Social Security benefit. Go to sa.gov and log into your My Social Security account. Your COLA notice for 2026 was available online in late November 2025, and you may have also received a paper notice in the mail. Look at the actual number deposited each month, not the gross benefit, the net amount after Medicare deductions. This is your real baseline. Write it down. If you don't have a My Social Security account, you can create one for free at sa.gov. You'll need your Social Security number and a way to verify your identity. Checklist item 2. Check whether IRMA applies to you and appeal if your income has changed. If your 2024 household income was above $106,000 as an individual or above $212,000 as a married couple filing jointly, you're paying more than the standard Part B premium. Log into your My Social Security account or call SSA at 1-800-772-1213 to confirm. If your income has dropped significantly since 2024 due to retirement, a spouse's death, divorce, loss of income-producing property, or a large one-time withdrawal you won't be repeating, you may qualify for a reduction. File Form SSA 44. It's worth a phone call to find out. Checklist item 3. Review your Medicare plan during open enrollment and mark your calendar now. Medicare open enrollment runs from October 15 to December 7 each year. That's when you can switch from original Medicare to Medicare Advantage, change your Part D drug plan, or switch back to original Medicare. Right now, in May 2026, you're outside that window, but you should be putting October 15 on your calendar right now and gathering your information before then. Your drug plan and your network of doctors can change year to year. Just because a plan was right for you last year doesn't mean it still is. If your income is limited, you may also qualify for Extra Help, a federal program that reduces your Part D drug costs. Call 1-800-MEDICARE to find out. Checklist item 4, build or maintain a cash buffer. If you have any investments or retirement accounts, financial planners generally recommend keeping enough cash on hand to cover 12 to 24 months of essential expenses. That means your rent or mortgage, utilities, food, medication, and insurance premiums. Here's why this matters right now. If the market dips and you need money, a cash buffer means you don't have to sell investments when they're down. You cover your expenses from cash and you let the portfolio recover. With interest rates where they are, high-yield savings accounts and money market accounts are paying 4% or more. Your cash buffer can actually earn something while it sits there. Checklist item 5, check your withdrawal rate if you have a retirement portfolio. If you're pulling money from a 401k, IRA, or other investment account, the question of how much you're taking out each year matters enormously. The research firm Morningstar estimates that for someone retiring in 2026, a sustainable starting withdrawal rate is about 3.9% of your portfolio per year. That means if you have $300,000 saved, withdrawing about $11,700 a year or $975 a month gives you a strong probability of not outliving that money over a 30-year period. If you're withdrawing significantly more than that, or if recent market dips have you drawing from a smaller base, it's worth sitting down with a financial advisor to recalculate. Checklist item 6, review your budget with the new healthcare numbers. Pull out your monthly budget, or create one if you don't have one, and update it with the 2026 numbers. Make sure it includes your actual net Social Security deposit after Medicare deductions, your new Part B premium of $202.90, your Part B deductible of $283 per year, your Part D plan premium and deductible based on your specific plan, and your Part A deductible of $1,736 if you anticipate any hospital stays. Knowing exactly where you stand every month is the single most powerful thing you can do for your financial stability. You can't protect money you haven't accounted for. Checklist item 7, protect yourself from financial scams targeting seniors. This is not an item most financial checklists include, but it's one of the most important. The Social Security Administration will never call you and demand payment. They will never ask you to verify your Social Security number by phone. They will never ask you to pay fees via gift cards or wire transfers. Any call, email, or website claiming to be from Social Security, Medicare, or the IRS that asks for money or personal information up front is a scam. Hang up. Don't click the link. The SSA has said clearly no government agency or reputable company will ever solicit your personal information or request advance fees in the form of wire transfers or gift cards. If you're unsure about a communication you received, checklist item 8, talk to someone, a real person, about your specific situation. Everything in this video is general information. Your situation is specific. Your benefit amount, your Medicare plan, your savings, your health needs, your tax situation, they're all yours. A certified financial planner who specializes in retirement income can help you put all of these pieces together. If cost is a concern, many nonprofit credit counseling agencies offer free or low-cost financial counseling for seniors. Your local area agency on aging is a great place to start. You can find your local office at eldercare.acl.gov. Your state health insurance assistance program, called SHIP, also offers free, unbiased Medicare counseling. They can help you compare plans and understand your options at no charge. Find them at shiptaycenter.org. Here's the bottom line. The 2.8% COLA for 2026 is real. The 9.7% increase in Medicare Part B is also real. The market volatility is real. And the purchasing power squeeze that many seniors are feeling, the sense that your money isn't going as far as it used to, that's real too. None of this is reason to panic. It is reason to pay attention and to take action on the things you can actually control. You can verify your benefits. You can check whether you're overpaying on Medicare. You can build a cash cushion. You can review your withdrawal strategy. And you can make sure your budget reflects the real numbers, not last year's numbers. That's not a small thing. For a lot of people, going through this checklist once a year is the difference between financial stability and financial stress. If this video helped you, please subscribe and turn on notifications, the bell icon next to the subscribe button. We cover Social Security updates, Medicare changes, and practical financial information specifically for people 60 and older every time something important changes. You shouldn't have to hunt for this information. We'll bring it to you. And if you have a question, leave it in the comments below. I read every single one. Take care of yourselves and take care of your money.
New here?
Start with our video on how to read your Social Security statement. Link on screen now.